The growing economic crisis amid the global coronavirus pandemic has led to the Federal Reserve to announce drastic emergency measures to shore up confidence and to keep the financial sector running. The Federal Reserve has slashed the key interest rate to virtually zero. The Fed has made its second emergency rate cut in less than 2 weeks, and the benchmark borrowing rate has been cut to a range of 0.25%. The rates are now at the same level as witnessed during the 2008 global financial crisis. The Federal Open Market Committee also pledged to maintain the same rates, quote unquote, until it is confident that the economy has weathered recent events. In a series of monetary policy moves, the Fed also brought $500 billion in Treasury debt and $200 billion in other securities. Fed Chief Jerome Powell was reported saying that the primary purpose of these security purchases is to restore smooth market functioning so that credit can continue to flow. The purchases will also foster more accommodative financial conditions. Now, Powell, in a briefing, warned that the U.S. economy will be weak in the second quarter of the year due to the coronavirus outbreak, as it is likely to show the impact of the coronavirus pandemic in April-June period, with businesses and manufacturing especially affected. However, the chance of recession this year will depend on how soon the pandemic impact can be contained. Powell also said that the Fed does not believe that negative interest rates will be appropriate, but fiscal measures by the government are critical to respond to the economy at large and the damage to the economy. The move was well received by U.S. President Donald Trump, who congratulated the Federal Reserve after it took drastic emergency measures. President Donald Trump has relentlessly demanded Fed rate cuts and more rate cuts, and said he is very happy with the decision.
I want to congratulate the Federal Reserve. For starters, they've lowered the Fed rate from what it was, which was 1 to 1.25, and it's been lowered down to 0 to 0.25 or 0.25. So it's 0 to 0.25. That's a big difference. It's quite a bit, about a point. And in addition, very importantly, the Federal Reserve is going to be purchasing $500 billion of treasuries and $200 billion of mortgage-backed securities. And that.
However, the fresh stimulus measures have failed to lift the confidence in markets all across. Falling sharply in trading ahead of Monday's official opening, Dow Jones futures slipped 4.5% on Fed moves. Investors are also on the edge as billions of dollars have been already wiped off markets across the globe. The US dollar also slipped as the Federal Reserve led with emergency rate cuts. Analysts have been expecting that the Fed will seek to revive some of the tools it used during the 2007 to 2008 financial crisis, including a commercial paper facility.